Welcome to the deep dive. Today we're jumping into something pretty fascinating, how trading robots have really changed over the last 20 years or so.
It's quite a journey, isn't it? From basic automation to, well, some seriously sophisticated AI now.
Exactly, and we've got some great info here from Faida Ventures Ltd. They've outlined how their own tools, their expert advisors or EAs, have evolved, which kind of mirrors the bigger picture in automated trading.
Mm-hmm.
So if you've ever wondered how we got from simple programs clicking buy or sell to these complex systems, well, this should give you a good handle on it. It's been a huge shift.
A fundamental shift, really. It's not just how trades are executed anymore, but how strategies are even, developed and adapted.
Okay, so let's start at the beginning then.
Mhm.
Our sources point to the early 2000s. This is what we're calling phase one.
Yeah.
The era of, simple scripts.
Right. This is when platforms like MetaTrader 4 really opened the doors for individual traders,
Yeah.
gave them their first real shot at automation.
And these early bots, they were pretty straightforward.
Oh, very. Think basic, rule-based logic. A classic example our source mentions is something like, if the RSI indicator goes below 30, buy.
RSI being relative strength index tells you if something's overbought or oversold.
Precisely. So RSI below 30, buy. RSI above 70, sell. And usually you tack on a fixed stop loss and a fixed take profit level. That was pretty much it.
Okay, simple. Like setting a basic alert. But the Faida Ventures info makes it clear these had big limitations.
Yeah, they really did. They needed nice, stable, trending markets if things got choppy or unpredictable or if the bigger economic picture changed.
They kind of fell apart.
They struggled, definitely. They were purely reactive, you see. No ability to understand context or adapt to, say, sudden volatility. A bit like a one-trick pony.
Okay.
But let's be fair, they did achieve something important. Reducing human error, taking emotion out of the trade execution, that was a step forward.
Right. Consistency was a plus, but adaptability, not so much. Very rigid.
Exactly. Which naturally leads us into phase two. The source calls this strategy-based algorithmic trading. What was the leap here?
Well, this is where the coding and the platforms themselves started getting, more powerful. Developers could build more complex logic into these EAs.
Moving beyond single if-then rules.
Yeah, exactly. It became about embedding a whole trading strategy into the code.
Okay, so give us a feel for that increase in complexity.
Sure. Instead of just one indicator, you started seeing EAs using combinations. Like maybe it needed a signal from the MCD indicator.
Which shows trend direction and momentum.
Right. That needed to show an upward move, and the price needed to be near the lower Bollinger Band, which measures volatility. So you needed like 2 or 3 things to line up before it would trade.
Okay, so layering conditions. Confirmation. Makes sense.
The source also mentions time filters becoming more common.
Yes. Things like only trade during the London-New York session overlap, for example. Trying to focus activity during periods of higher liquidity or expected movement.
Yeah, trying to pick the best times. And it wasn't just about getting in trades. Phase 2 saw more sophisticated money management features, too.
Absolutely. This is where you started seeing things like martingale strategies integrated.
Where you increase size after a loss. Risky stuff.
Can be, definitely. Or grid strategies, placing orders at set intervals. These were attempts to manage risk or recovery within the EA itself, though, as you said, sometimes these approaches carry their own significant risks if not handled carefully.
So phase 2 bots were smarter, more strategic, but still flawed. The source says they lacked real market awareness.
That's the key limitation, yes. They were still fundamentally following preset rules. They couldn't really understand or react to completely unexpected events.
Like a black swan event,
Right.
sudden crisis, or a major policy shift.
Exactly. Those kinds of things could just blow these strategy-based EAs out of the water because they weren't programmed for the unimagined.
Which brings us neatly to phase 3. This feels like the big one. Integrating machine learning and AI.
Oh, absolutely. This was, well, revolutionary. We moved from systems that just follow rules to systems that can actually learn from data and adapt over time.
Okay, how does that work in practice? How does a trading robot learn?
So there are a few key things. First, these AI systems can chew through vast amounts of historical market data, way more than a human could. They spot complex patterns, things a human or simpler bot would miss, and then adjust their strategies based on what worked or didn't work in the past.
Okay, pattern recognition on steroids.
Pretty much. Second, they can use something called natural language processing, NLP. This lets them process news articles, social media chatter, economic reports.
They can read the news.
In a sense, yes. They interpret that unstructured data to get a feel for market sentiment and the broader context. It's like giving the robot eyes and ears layers beyond just the price charts.
Wow, okay. That's a big step.
Mm.
What else can these AI systems do?
Well, they can adjust trade sizes dynamically based on how risky they perceive the market to be right now, not just using fixed rules.
Hmm.
And maybe most impressively, they can find these really subtle, nonlinear connections.
Meaning,
Like maybe a tiny change in oil prices combined with a certain pattern in social media posts often leads to a specific stock moving a day later. It's the kind of complex relationship that's almost impossible to find manually, but an AI can detect it across different markets and timeframes.
that's pretty powerful. The Faida Ventures material actually mentions their Faida neural matrix 7.30 EA as an example here. What's special about that one?
It's a great example because it combines traditional market logic, those rule-based triggers we talked about, with a neural network.
Okay, neural network, like an artificial brain.
Sort of, yeah. It's a system designed to process information in a way inspired by the human brain, learning and adapting. In this EA, the neural network acts like a smart filter. It looks at potential trades suggested by the market logic, but then it uses its learning based on price behavior, volatility, volume patterns to assess the probability of success before actually taking the trade.
So it's adding a layer of probabilistic forecasting on top of the basic rules, much more nuanced.
Exactly. It's not just is the condition met. It's given the current learned patterns, how likely is this condition to lead to a good outcome?
Okay, so that's phase 3, kind of the current state of the art. But the source looks ahead too, talks about autonomous systems and generative AI. What's next?
Yeah, this is where things get really futuristic, you could say. We're talking about the potential for truly self-evolving systems.
Self-evolving, meaning they rewrite themselves.
Essentially, yes. Imagine EAs that don't just tweak parameters, but can actually generate entirely new trading strategies based on their results, shifts in the market, even analyzing what competitor algorithms might be doing. They learn how to adapt their core logic.
Wow, that's a leap. What tech makes that possible?
We're looking at things like real-time deep learning becoming even more powerful, autonomous decision trees that can explore vast strategy possibilities, and generative AI tools. Think AI that can actually create novel trading approaches based on high-level goals.
What would that mean for traders, both individuals and big institutions?
Well, the potential is huge for both.
Mm-hmm.
Greater speed, smarter adaptation, more resilience. For retail traders, it might mean access to incredibly sophisticated strategies that were once only possible for hedge funds.
Same for the institution.
Even higher levels of automation, potentially finding new sources of alpha, managing risk in even more dynamic ways, it could really change the game again.
So looking back, it's an incredible arc. Simple scripts in the early 2000s, just following basic rules, to strategy-based systems in phase 2, and now these adaptive learning AI systems in phase 3. And maybe autonomous ones on the horizon.
It's a massive transformation, absolutely. And, understanding this evolution isn't just for tech geeks anymore.
Right, if you're involved in the markets at all, even just investing.
You really need to have some grasp of how these tools are changing things. It's fundamental to how markets operate now.
And Faida Ventures, our source here, they clearly see themselves as part of building that future. Their message is about upgrading your trading with intelligence engineered for performance.
Makes sense, given the trajectory we've discussed.
So for you, the listener, whether you're new to trading or maybe thinking about managed accounts, where these kinds of tools are used, getting your head around this evolution is really key to making smarter choices.
Definitely. And if you want to explore more, Faida Ventures mentioned their YouTube channel. That's youtube.com/Faida Ventures. They seem to post insights and info on their EAs there.
Good resource. Now, we do need to include the standard disclaimer here, which Faida Ventures provided. This discussion is purely for educational purposes.
Right.
Faida Ventures Ltd. Isn't a regulated financial entity, so you should always talk to a licensed financial advisor before making investment decisions. Very important.
Absolutely critical.
And if you're searching online, some relevant hashtags are hashtag trading robots, hashtag automated trading, hashtag algo trading, hashtag Faida Ventures, hashtag forex trading, hashtag machine learning, hashtag AI trading, hashtag neural networks, hashtag investment strategy, hashtag smart investing, hashtag financial freedom, hashtag trade smart, hashtag tech trading, hashtag managed accounts, hashtag trading education, and hashtag future of trading. Quite a list.
Covers the bases. But yeah, this whole area just shows how fast technology is moving in finance.
It really does. Which kind of leaves us with a final thought, doesn't it? As these trading systems get more and more autonomous, more AI-driven, what new questions does that raise?
Good point. Ethical questions, regulatory ones.
Exactly. What happens when the machines are making increasingly complex decisions on their own? Something definitely worth thinking about. Well, thanks for joining us on this deep dive today.